Well, good afternoon, everyone. It's about 10 to 3 here in the UK on Wednesday, the 26th of April. And finally, yesterday, you'll have noted that markets have broken out of a 2 to 3 week trading range where to use an expression made famous by Richard Wyckoff, we had a series of clustered closes and market broke down strongly. As a result, all of the measures of the trend on the front page of VectorVest are down. The short-term trend is down, underlying trend is down. We've got a confirmed down in place. And I think what's really more important is the breadth of the market, which was low already, but has fallen to nearly to mega oversold levels over the last couple of days. So VectorVest does not advocate buying stocks at this time. Very good advice. S&P up 8, gapped up at the open, up about 9 points as we speak. So if we have a look at the VectorVest composite, which I hope I've got open here, this is the long-term trading range over the last year. This is a candlestick chart over the last year, and you can see how this market has actually gone nowhere over the last year. We go a little bit further back, we can see that was the bear market that started in November 2021. So a very difficult period of trading, not just me saying that, but I think pretty much everybody who's been anywhere near the market saying that. This is the measure of VectorVest's proprietary measure of market breadth, the buy-sell ratio. Number of shares on a buy divided by the number of shares on a sell. And as you can see, this thing has gone nowhere. Prices are rising, very, very poor breadth in the marketplace. And I felt certainly in my communication to the VectorVest subscribers on Monday afternoon, I felt that this market had to come back a little bit. So if I put on my old faithful stochastic, my 8-bar stochastic, so hourly chart 8 hours, daily chart 8 days, weekly chart 8 weeks, monthly chart 8 months. We're looking at daily chart here, and we can see, let's get rid of the buy-sell ratio. We can see that as this thing was rising, the stochastic was making a falling top. That's bearish, normal divergence, and that was predicting a sell-off. The stochastic is now down at 18 and is starting to move into an oversold position down here. But it is my experience that when the stochastic gets down to about 20, it takes, even under the most positive circumstances, 3 to 4 days, 3 to 5 days for a turn to take place. So even under the most positive I think that we've probably got certainly a few more days of pain left. The bearish view, of course, is that we've got a head and shoulders reversal setting up here, and that bit, if we break this level, that bit should be repeated on the downside, which would take us down one hell of a long way. And there are some exceptionally experienced investors such as Mike Wilson at Morgan Stanley predicting an S&P fall, for example, to about 3,200. And of course, there's many, many bearish people saying it's going to go lower than that. I don't know. Nobody else knows. I shall be following the market, and certainly today is not a good day to be buying stocks. We have a look at the S&P. I think I've got the intraday. That's the intraday situation. That's the SPX in a 5-minute chart. And I traded this twice yesterday. That's just inside bars. Okay. Breaks down below the low. Stop loss. Wrong thing. Stop loss up there. You can test your trading idea for virtually 5 S&P points, and it fell very nicely indeed. And then the next setup was we got this little flag type pattern. Love my flags, as the VectorVest customers will know. Without a doubt, bear and bull flags are my favorite trading pattern. I know you've heard of them 1,000 times, but my word, they just keep working. There's also an outside bar there, and I managed to get short there, and I held it for most of the day. I was in a VectorVest webcast, I think. I took my eye off the market and it just kept on falling. So that was very nice. I haven't done anything as yet today, and I've been doing these things for years and I still can't remember to switch that ringer off. So wait for a setup here today. So I want to look at two positions that I've got. One is in the GDX and one is in the QQQs. And the QQQ, looking at it, this is the NASDAQ 100 exchange traded fund, is quite positive, and it's setting up a very positive trading pattern where you can risk just a little bit to make a lot. I like to be trading at the extremities where the risk is lowest and the reward is greatest. That was said by Richard Wyckoff about 100 years ago in one of his books. That was the QQQs running up since January. And then we pull back again in a 5-wave flag pattern. Moving averages are saying the trend is up. And what we've done here, I have a position in it long from down around here somewhere, but it's now pulled back. I've taken a little bit of profit here, but I've still got some open, and it's pulled back. And we've, in fact, gone back to where this resistance and that resistance has now become support once and support again. We went through it yesterday, and folks, if this market should reverse from here, this would be a classic Wyckoff spring. Not the easiest thing to trade. Its objective is to make money by only risking a little bit to make a lot. It doesn't make money by calling the market direction correctly that often. So it's not a high hit rate methodology, but certainly after that big bar down, if I saw the market, in fact, closing above yesterday's big bar down, I would be tempted to go long there in that. Clearly, there are results coming out that can affect that today, but that is a fairly good technical setup on its own. And that's starting to look quite good to me. So if I saw this market closing above the high of yesterday's bar, then I think I'll add back into that position in the QQQs. The other position that I've got running is in the GDX. I'm very positive about gold, and that's the GDX. I've had this position running now a couple of weeks. I'm going to do my best to try and stay in the position. Whether I'll succeed in that, I don't know, but the position is in the money. It was well in the money when it got to 36. It's pulled back to kiss that old top, and we got some buying coming in there. I wouldn't be at all surprised to see another leg back, an AB equals CD back. We shall see. The trade I like the look of on a longer term perspective because there is a huge moving average is not that much use on a weekly chart. There is a huge Gartley pattern, and as you can see, let me show you, this market stops exactly at that 78% retracement. So we have this thrust and this AB equals CD down, and I think we're just about to move here. So I'm going to do my best to sit in that position if I possibly can. I think the target here is huge. I went through the spot gold market with the VectorVest customers on Monday afternoon, as I do every Monday afternoon. And my feeling is that gold needs to pull back for 3 to 5 weeks before it really starts to motor. So there could be some pain in this position before it starts to go again. But I'm reasonably positive about that. And there are lots and lots of individual gold shares that I think that you should look at. And seriously consider buying into them on any weakness over the next 3 to 5 weeks. Okay. I think that a good level in the GDX, and if we can get a little bit of confirmation in the QQQs, and that's quite a turnaround from yesterday, I know. The springs are always the same. They get you involved in the market at the point of maximum pessimism. But my word, they make money, because you risk a pound to make 5 or 6 pounds, and you don't have to be right that many times to make really, really good money if you've got that risk to reward ratio, as the Americans call it, a asymmetrical risk to reward ratio. So that's what I'm looking at, folks. But the front page of VectorVest, we're up 8 points on the day. Markets waiting results from big companies. And after yesterday's move, that is the hourly chart. After yesterday's move, I think we probably could easily see a very quiet day today. So I haven't done anything as yet. I haven't done anything as yet. It's amazing how much money you can make intraday just with a few simple patterns. Inside days, outside days, and a simple measure of the trend. So I hope you found that useful, folks. For most of us in the stock market, certainly in the US market, it's time to sit in hands and wait for the trends to turn. Even under the most positive circumstances, if we have a look at the VectorVest composite, all the trends are down, and even under the most positive circumstances, it's going to take 3 to 5 days for those trends to turn. Thanks very much indeed. Bye-bye.
Yeah.